In South Africa, we have two types of VAT registration. We've got compulsory registration, and this means that the person is required to register as a VAT vendor. So they don't have a choice. If they meet certain requirements, they have to register as a VAT vendor. The burden of proof for compulsory VAT registration lies upon the person. And this registration must be done within 21 business days, which excludes weekends and public holidays, after the person becomes liable for registration. The second type of VAT registration is voluntary registration, and this is where the person can choose to register as a VAT vendor. They are not obliged to yet, they don't meet the compulsory VAT registration requirements, but they have the option to voluntarily register as a VAT vendor. The focus of this recording is going to be on compulsory registration. Now, there are three instances where a person will be required to register as a VAT vendor. In other words, where there's compulsory VAT registration. For our purposes, we're only going to focus on the first two. Foreign suppliers of electronic services is something that is done a bit later in your academic journey. Okay, so let's look at the first instance, past supplies. You will be obliged to register as a VAT vendor at the end of the month during which the total value of taxable supplies for the preceding 12 months exceed 1 million rand. Now, just a few things. If we talk about taxable supplies, we are looking at standard rated supplies and zero rated supplies. Standard rated means that VAT is levied on those at 15%, and zero rated supplies means VAT is levied at 0%. Value for VAT purposes is the amount excluding VAT. So if we look at the total value of taxable supplies, we are looking at the value of basically turnover, but taxable, so standard rated and zero rated. And then there's no reference here to tax periods or financial years. So the 12-month period is any consecutive period of 12 months, right? So it's not linked to a specific tax period or VAT period or a financial year. We look at any consecutive period of 12 months. If at the end of the month, for the preceding 12 months, the value of your taxable supplies exceed R1 million, you are going to be obliged to register. It's going to be compulsory. We also have future supplies. So the first instance is we look at past supplies. We look towards the past. We look back. Future supplies means we're going to look forward. We look towards the future. And you will be obliged to register for VAT at the beginning of the month if it is anticipated that the total value of taxable supplies in terms of written contractual agreements will exceed 1 million rand for the following 12 months. Now, if you look at these requirements, you'll see we're again talking about value, which is the amount excluding VAT, taxable supplies, which is your standard rated and zero rated supplies. But what's very important here is that when we look at future supplies, there needs to be written contractual agreements as evidence that it is anticipated that the 1 million rand threshold will be exceeded. Okay, and again, if we look at 12 months, we're looking at any consecutive future period of 12 months. We're not looking at a year of assessment or a financial year or a tax period. When we do the calculation of that 1 million rand threshold to determine whether a person exceeds that, either for past or future supplies, there's a few amounts that need to be excluded, right? Which is listed in the VAT Act. The amounts that are excluded are amounts that arise from supplies that is a result from the ending of an enterprise or a substantial and permanent reduction in the size or scale of the enterprise. In other words, if you are selling off a number of assets because you are ending your business, you might exceed that 1 million rand threshold, but because it is supplies that result from the ending of your enterprise, we are going to ignore them if we do this compulsory registration, the 1 million rand threshold calculation. We'll also exclude supplies that results from the replacement of capital assets. So if you have, you sell assets because you want to replace them, we will also not include those within the 1 million rand threshold calculation. And then supplies resulting from temporary abnormal circumstances. For example, if you are a farmer and, a fire destroyed your grazing lands and now you have to sell sheep, or if you think about the floods in KZN, if for whatever reason, temporary abnormal circumstances like the floods, somebody has to now dispose of a number of assets which increases their turnover, but it's not a regular thing, we will also exclude that from our 1 million rand threshold calculation. Something to think about, and which is also, a big question that comes up in practice is what happens if one person carries on more than one business? And this is where the definition of person is so important. So let's take a look at an example. So Tumi is a sole proprietor that has two businesses. She has a hair salon and she has a bakery that are situated on two separate premises. And then the question is, who has to register for VAT purposes? Is the hair salon going to be registered separately? Is the bakery going to be registered separately? Or is Tumi going to be the one that registers? And your answer is that it's always the person that conducts the enterprise, or the enterprises, the businesses, that must register for VAT purposes. So in this case, our person is Tumi. It's not the hair salon and it's not the bakery. She's the person, and therefore she will be required to register as a VAT vendor if the combined supplies from her two businesses exceed the 1 million rand threshold, because she is the person that conducts the enterprise. However, if we take a look at example 2, if Tumi was not trading as a sole proprietor, if she registered two private companies and she conducted the hair salon from the first company and the bakery from the second company, then the individual companies are now our persons, which means that the hair salon company will only be required to register for VAT once the taxable supplies from that hair salon exceed 1 million, and the bakery company will also only be required to register for VAT once the taxable supplies from the bakery exceed 1 million. Now just be careful, we've got a specific anti-avoidance section, section 50A in the VAT Act, that is aimed at stopping persons from splitting business activities into companies, for example, to avoid exceeding the registration threshold. So if you are just, instead of trading as a sole proprietor, you are starting companies so that you can split your business activities so that you can avoid VAT registration, then this anti-avoidance measure, section 50A, gives SARS the power to basically ignore the fact that you're trading as different persons. Okay. Something also to keep in mind when we talk about companies is that a group of companies cannot register as a single vendor. Each person, so each, the holding company and the subsidiaries, they must all register separately because each company is a separate person. So once the company, each individual company, exceeds the 1 million rand threshold, they will then be required to register for VAT. Also, something to think about is what happens if a person, whether it's a natural person or a company, carries on an enterprise with branches or divisions. And if you are based in Bloemfontein, you will know that we have a store here called Kloppers. Kloppers, the company, is Six Sons Pty Limited, trading as Kloppers. And Kloppers has got a number of branches. They've got one in Bloem, George, PE, Okebega, as well as Knysna. Now the question is, who technically, in terms of our registration requirements, the person, so Six Sons Pty Limited, has to register for VAT purposes, but we do have a provision in the VAT Act that says if you carry on a business with branches or divisions, like Kloppers does, Each of the branches or divisions can register as a separate VAT vendor for VAT purposes, even though it's not technically a separate legal person, if it meets the following two requirements. The branch must maintain its own independent accounting system, and the branch can be separately identified by the nature of its activities or the location of the branch. So Klopper, the company, can have each of their branches separately registered. So Klopper's George will have a separate VAT registration. Klopper's Neisner will have a separate VAT registration, provided that they meet these two requirements. And to determine whether the branches are required to register, we're going to take all the taxable supplies of the different branches and we're going to add all of these together to determine if the 1 million rand threshold has been met. If the 1 million threshold has been met, then each branch, again, provided that they meet these two requirements, can be registered separately.